Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2025, and we're diving into MSCI's fourth quarter and full year 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. MSCI, a leader in providing decision support tools for the global investment community, has just released its latest financial results. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. MSCI reported operating revenues of $743.5 million for the fourth quarter, marking a 7.7% increase. John, what are the key drivers behind this growth?
The growth in operating revenues was primarily driven by a 7.5% increase in recurring subscription revenues and a significant 20.8% rise in asset-based fees. However, it's important to note that net income decreased by 24.3% to $305.5 million, largely due to higher operating expenses and a one-time gain in the previous year that wasn't repeated.
Despite the decline in net income, MSCI's adjusted EBITDA margin improved to 60.8%. What does this tell us about the company's operational efficiency?
This improvement in the adjusted EBITDA margin indicates that MSCI is effectively managing its costs and achieving operational efficiencies, even as it invests in growth areas like data and technology.
EPS performance and analyst expectations. MSCI's adjusted EPS came in at $4.18, which is a 13.6% increase from the previous year and above the forecasted $3.96. John, how significant is this beat?
This is a notable achievement for MSCI. Beating the forecasted EPS of $3.96, as predicted by 5 analysts, by a substantial margin highlights the company's strong financial performance and ability to exceed market expectations. It reflects positively on their strategic initiatives and cost management.
Segment performance and strategic initiatives. Let's delve into the segment performance. The index segment reported revenues of $420.2 million, an 8.3% increase. What are the key factors contributing to this growth?
The growth in the index segment was driven by higher asset-based fees and recurring subscription revenues, particularly from market cap-weighted and ESG index products. This segment continues to benefit from increased average assets under management in ETFs linked to MSCI indexes.
And how about the ESG and climate segment, which saw an 11.8% increase in revenue?
The ESG and climate segment's growth was fueled by strong demand for ratings, climate, and screening products. This reflects the growing importance of sustainable investing and MSCI's leadership in providing ESG data and analytics.
Operational efficiencies and future outlook. MSCI's operating margin for the quarter was 54.5%, and the retention rate stood at 93.1%. How do these metrics reflect the company's operational health?
The strong operating margin and high retention rate indicate that MSCI is not only efficient in its operations, but also successful in retaining its customer base. This is crucial for sustaining long-term growth and profitability.
Looking ahead, what can investors expect from MSCI in 2025 and beyond?
MSCI is well positioned to expand its footprint across both established and emerging client segments. The company's continued investment in data, models, and technology is expected to drive compounding growth across market cycles, as highlighted by CEO Henry A. Fernandez.
Key takeaways. In summary, MSCI has delivered a strong performance in the fourth quarter and full year 2024, with significant revenue growth and an impressive beat on EPS expectations. The company continues to demonstrate operational efficiency and strategic foresight. John, any final thoughts?
MSCI's robust financial metrics and strategic initiatives position it well for future growth. The increase in dividends and substantial share buybacks further underscore the company's commitment to returning value to shareholders.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on MSCI's performance in the comments below.